There's something really strange going on in the world of energy right now. Geopolitical tensions, they're at a boiling point, but the price you pay at the pump and the global price of oil, they're surprisingly stable. It just doesn't seem to add up, and today we're gonna figure out exactly why.
So this is the big mystery we're unpacking. With all of this chaos, you've got sanctions on major players like Russia and Venezuela. You've got conflict in Europe. Why haven't oil prices just shot through the roof like we've seen in past crises? What's different this time?
And this chart really just lays the paradox bare, doesn't it? On one hand, you have this massive level of geopolitical risk, which should be sending prices sky high. But on the other hand, the market is telling a completely different story. Prices are, for a period like this, pretty darn low. The reason, well, it's actually simple, but it has these huge implications for the future. And here it is, the one-sentence answer: a market surplus. Basically, there's more oil being produced than the world actually needs right now. Supply is simply outrunning demand, and that imbalance is acting like a heavy lid on prices, no matter how crazy the headlines get. So let's break down where this surplus is coming from and what's being done about it. Okay, first up, we have to talk about OPEC+, that powerful group of the world's biggest oil producers. They see this surplus, and trust me, they are playing a very, very careful game to keep prices from totally crashing. So to get what's going on, you have to look at their strategy. They've had these 3 different layers of production cuts in place, all designed to keep supply tight. Then, over the summer, when demand went up with travel and everything, they cautiously let a few more barrels back onto the market. But the second that summer demand started to fade in the fall, they slammed on the brakes, hitting pause and deciding not to release any more oil for now. So why are they so hesitant? It's because they're genuinely worried. Their actions are sending a really clear signal. They believe the market is fragile. If they were to just open the taps full blast, they're afraid oil prices wouldn't just dip, they'd completely collapse. So they are very carefully managing the surplus, not adding to it. Okay, so if OPEC Plus is holding back, where is all this extra oil coming from that's creating the surplus in the first place? Well, a huge piece of the puzzle is sanctioned oil, especially from Russia, which is still finding its way onto the market despite all the international pressure. And what's really fascinating is this quote. Get this, it's from a US legal case way back in the 1800s, but it perfectly, and I mean perfectly, captures the reality of today's oil market. You can try to build a cage around the wild animal of oil with sanctions, but it's almost impossible to stop it from finding a way out. So how does it escape? Well, Russia uses a so-called dark fleet of tankers that are almost impossible to trace. They use confusing, opaque transactions, and they even blend their oil with other kinds to hide where it came from. And here's the kicker, they're selling it at a discount to new buyers like India. The bottom line, despite the sanctions, the barrels just keep on flowing, adding to that global surplus. But look, this whole surplus thing, it isn't just a story about supply. The other side of the equation is demand, and there is a huge long-term shift happening that is changing everything. I want you to think about it like you're driving a car. The world is still using more oil every year, so the car is still moving forward. But, and this is the important part, the rate of that growth is slowing down. We're not accelerating like we used to, we're easing our foot off the gas. And that's thanks to things like the incredible rise of electric vehicles and huge improvements in energy efficiency. Now, we haven't quite reached what analysts call peak oil demand. That's the big moment when global demand actually stops growing and starts to fall. Think of that as the summit of Mount Everest. We're not there yet, but the climb, it's getting noticeably less steep. And just the realization of that fact changes the entire psychology of the market. Because think about it, in a market that's growing super fast, there's enough new business for everyone to get a piece of the action. But when the market is barely growing at all, it suddenly becomes a zero-sum game. Producers aren't competing for new customers anymore, they're fighting each other tooth and nail for the same limited share of the pie. In this new reality, it's kicking off a completely different era of competition. You could really call it a battle of the fittest. The rules for winning in the oil business have fundamentally changed. It used to be that the winner was simply the country or the company that could pump the most oil out of the ground. Volume was king. But that's just not enough anymore. The new winner is going to be defined by efficiency. So, the fittest producer in this new world is the one who can do 2 things better than anyone else: get a barrel of oil out of the ground for the lowest possible cost, and This part is absolutely key. Do it with the lowest carbon intensity. That means emitting the least amount of greenhouse gas for every single barrel. It's a brand new equation, pure economics plus environmental efficiency. And this matters for everyone. This new dynamic is what's forcing the entire industry to get leaner and cleaner. All these companies and countries, they know that to survive in the long run, they have to be low cost and low carbon. And that is cranking up the competition between them like we have never seen before. So as the world's energy needs keep shifting and this market gets more and more competitive, the real question for the entire industry becomes this. When demand finally does peak and starts to decline, who's going to be left producing the very last barrels? That is the battle being fought right now.